I'm here in Denver, Colorado, about to teach a masterclass on how to get started in commercial real estate for the Real Estate Investor Summit brought to you by Brandon Turner's Better Life Tribe. This is going to be an incredibly actionable talk. There's going to be some free downloads for you all at the end of the video as well. So let's dive on in.
Would you give me the distinct pleasure of welcoming Tyler Cauble?
Thank you. Thank you. So, walkout song, funny story, I was joking about coming out to heavy metal because when I was a kid growing up, all of my friends listened to hip hop. So I was the weirdo that could never listen to my music in the car. So now I selfishly get to make you all listen to Metallica when I come out. What's going on, y'all? I'm Tyler Cauble. Excited to be diving into the most challenging session of the day since you guys just ate lunch. It's gonna be a fun one. We're gonna be diving into commercial real estate. Who owns commercial real estate already? Who wants to own commercial real estate? Who is tired of residential real estate? Yeah, that's what I'm talking about right there. So I am a professional commercial real estate investor. I've been doing this for 10 years. I own 3 different companies. So the Cauble Group, which is a commercial real estate brokerage, Parasol, which is a commercial property management company, and Hamilton, which is my development firm. We currently own over $60 million worth of real estate that I've acquired since 2019. We manage and own about 2.1 million square feet. We broker about $70 to $80 million a year. These are a couple of my projects, some things I've got going on, just so y'all know a little bit of my experience. I'm not some guy making up stuff about commercial real estate up here. On the top left-hand corner, that is a 6-bay car wash that I converted into 5 micro restaurants and a bar. 380 square feet, all 6 leases signed within 2 weeks of announcing the project. Hadn't even broken ground on it yet. We just realized, hey, there's probably a need for affordable restaurant space. Nobody else is focusing on that. Everybody talks about affordable housing. Nobody talks about affordable business space. Top right-hand corner, I'm gonna tell you guys about that project here in a little bit. We'll do a little bit of a case study on that one. Bottom left-hand corner is a boutique hotel that I am happy to announce after 2 years of fighting with Metro Nashville, we finally got our construction permits to renovate that. So excited to get that one going. That is the joys of commercial real estate sometimes. It takes a little bit longer. And then who's seen me on YouTube? Anybody? A few of y'all? Awesome. I've got a YouTube channel that I started back in 2020 to teach people about commercial real estate. Because what I noticed when I was first getting started in the industry is there is no educational knowledge out there. It is very hidden. Nobody wants to share anything with you. It's like they're afraid of creating competition, and I don't care. So what we won't be covering today, why commercial real estate is better than residential. You probably already know that if you're in here. It's just a fact. The benefits of investing in commercial real estate, the pros and cons of different asset classes. This is gonna be highly, highly actionable. So we may not even have time for Q&A. I will hang out in the hallway afterwards. That QR code will take you to 5 downloads that we're gonna talk about today that will basically give you everything you need to get started. So let's dive into it. First, let's cover the different lease structures, building your team, and the capital stack. Because if you're coming from residential real estate and you don't have any experience in commercial, these are a little bit different. In commercial real estate, there's 3 primary lease structures. You've got full service gross, which is typical in office or older assets. If you're coming from multifamily, full service gross is the most relatable to multifamily, where, well, I guess modified gross could be too. But in full service gross, you as the landlord collect one lump sum payment of rent from your tenant. You then pay all of your expenses, and then you hope that there's profit left over. That's why I can't do the multifamily game. If your insurance increases, if you have a snowstorm and you got to clear out the parking lot, you can get into a lot of trouble there. I don't like full service gross leases in most cases because your profit margins can very easily get attacked. And also what you'll find if you're starting to farm for commercial real estate deals, most of the landlords that are bad landlords use this lease structure because they pretend to pay for the property expenses out of that, but they just treat it like a profit center, and then they don't actually keep up with the property. Modified gross is a hybrid between full service gross and triple net. So in a modified gross lease, it's pretty much one lump sum payment, and then the tenant might pay for something else on their own, right? So I guess that's more akin to most multifamily product, which is tenants paying their utilities, right? You could also have the tenant pay for their pro rata share of the common area maintenance of the property. You could have them pay for their pro rata share of the property taxes. Great thing about commercial real estate is you can structure the deals in so many different ways, which can get confusing. So typically what I tell new investors when they're first starting out, go for triple net. It's the easiest, it's the most protective of landlords. Essentially in a triple net lease, you collect a base rent, and then you have what's called an additional rent. So the tenant then pays their pro rata share. It's based on square footage of the total property. They'll pay their pro rata share of the common area maintenance, so cleaning up the parking lot, paying for the lights in the parking lot, whatever that is, bathrooms, elevators. Their pro rata share of the property taxes. So if property taxes go up, guess what? You pass that bill on to the tenants. You don't have to worry about that increasing year over year. Same with the insurance as well. So it's the easiest model as a new landlord to predict what your income is going to be because you don't have to try and worry about operating expenses going up over time. Building your team. When you are getting into commercial real estate, this is a team sport, right? Residential real estate, you can do on your own. You can be like Britt and be a total badass and go out and renovate these houses completely by yourself, right? In commercial real estate, I don't advise you doing that. There are a couple of guys that I know that do that. They're not very successful because this is a team sport. There are so many different aspects to it. This is like a true business, right? So you have to have specialized team members. Commercial real estate broker. They are just like the residential agents, except they do commercial. You've got a commercial attorney, just like your regular attorneys, but they do commercial. Commercial contractor, commercial lender, and of course a commercial mentor and partner. Anybody noticing a pattern among all of those? Commercial. Don't go hire a residential contractor to build out a commercial space. See it all the time. Or hire a residential real estate agent to help you with a commercial property. Two sides of the same coin. Very, very different. The metaphor that I use is it's like hiring an environmental attorney to protect you in a DUI. Yeah, they're both attorneys, right? Totally different practices. And you want to make sure that you've got somebody that is specialized that actually knows how to look at rent rolls. Somebody that knows you've got to put commercial grade carpet down because if you put residential grade carpet down, that will be bad in about 6 months, depending on what kind of property it is. So very important that you build a team of commercial real estate partners. Let's talk about the capital stack because when you're getting into residential real estate, everybody talks about like, oh, you can get in it with no money down. You've got sub 2. There's a lot of really creative ways that you can do this. You can do that in commercial real estate. You can. A lot of people won't talk about that. It's a lot harder, promise you. It's worth it if you're willing to put the work in. Typically, you're looking at 20 to 25% down payments. So if you're buying $1 million property, that means you're putting down $200,000 to $250,000, right? That's everybody's biggest complaint about commercial real estate is, oh, it's more expensive. Yeah, it's a lot better, right? Come on, Rolex is more expensive than those little Casio watches we used to have. There's a reason. Right? You'll typically then get 75 to 80% from a senior loan. You're not going to go to Bank of America for this. You're not going to go to Merrill Lynch or Fifth Third Bank. You're going to go to a local lender. I typically look for banks that have 3 to 5 branches within, I don't know, a 30-mile radius, give or take, because they know the market well enough that they are going to be your most likely candidate to lend on that property. Right now, everybody's talking about like, oh, commercial real estate's in a lot of trouble. And we can talk about that at one point if you guys want to. It's not true. But it's the local lenders that have like 80% of the commercial real estate debt out there. And so that's why some people are a little bit worried about it because these are smaller banks that have a majority of the debt. But you can do 100% seller financing. You can do seller carrybacks. Disclose that to your lender. If you've been following me on YouTube, there is another real estate guru out there who has a method that is very unethical and will get you arrested for bank fraud. So disclose to your lender what you're doing. Syndication and capital partners, that's how I grew my portfolio. I had $0 of the real estate in 2019. I've been a broker since 2013. I knew exactly how to go through the process. I didn't have any money. So I went out and raised capital from other people. Surprisingly easy if you just start small. First project was $575,000. Called 2 investors. They'd known me for 5 years. Got $50,000 each. Very easy. That same year, I bought 4 more buildings. You can also do lease to own if you got a business. Typical transaction timeline is 30 to 90 days on finding a deal. It really actually doesn't take that long if you know how to look for a deal, and we're gonna get into that today. It could also take you 14 to 30 days to negotiate your purchase and sale agreement. There's no such thing as a National Association of Realtors form when it comes to commercial real estate. It's very common to do that in residential, right? You've got this standardized, templatized document that you're able to use, but and look, they do offer that for commercial real estate. Please don't use that, please. Every deal is so different in commercial. That's why you have to have a commercial real estate attorney on your side. They will finalize the letter of intent for you. They will negotiate the contract. They will negotiate the terms of your loan with the bank. It is more than worth it to pay those attorneys. You're probably gonna end up spending $3 to $10 grand on a deal to have an attorney do all of that for you. Most I've ever spent was about $30,000 on an attorney for a deal. It was for an $18 million project, right? So just go out and spend the money. Attorneys are always worth it. Due diligence, 60 to 120 days. We'll get into that here in a minute as well. That's the biggest difference going under contract between residential and commercial is the time spent during your due diligence phase and what you actually have to do during that period. And I'll explain to you why. Because when I start talking about, the average, the total time for one of these deals being 134 to 300 days, most residential investors are like, what the hell are you guys doing? Right? We're closing deals in 14 days, 30 days, really fast. I would never do that in commercial unless I had a stack full of documents handed over to me that could make me comfortable with it. Also, banks take like 60 days to get you a loan. That's the biggest piece of this puzzle. And typically they want to see a lot of documents before that. All right, let's talk about finding deals. These kind of look familiar, don't they? Isn't that funny? It's the exact same as residential real estate. The biggest thing that I hear from people all the time is, I don't know how to get started in commercial real estate. Okay, well, how did you get started in residential? You started listening to podcasts. You started going to real estate meetups. You found a real estate mentor. You partnered with somebody on it. You read the books. You watched the YouTube videos, right? You can do the same thing in commercial. Don't think that you've already learned everything just because you've gone through, 20 residential real estate investments. It's a bit of a new industry, right? Similar processes. You've got 80% of it down. It's the other 20% that we got to kind of dial in. Drive the market, cold call property owners, you use white pages. I'll talk to you a little bit about how we do that here in a second. Online search platforms. You got, the Craigslist of the world. You can actually find deals on Craigslist, which is kind of wild. I've found good deals on there. Tax records and CRS data. We're going to talk about CRS data here in a second. It's kind of like our, silver bullet. And I was talking to some people about that last night, and they were like, what's CRS data? I couldn't believe that people didn't know what that was. Sending direct mail is one of my favorites. Who has sent direct mail for residential units? A lot of y'all. Everybody that owns a home gets 1 million pieces of mail from people like y'all that want to buy their house. Commercial property owners get nothing. We get like notices from the IRS. That's it. You know how excited I get when I have a hand-addressed letter and I'm like, oh, cool, somebody wants to talk to me. No, just somebody else that wants to buy my property. But it's only one person. It's awesome. So we'll talk about that. I'm actually going to give you guys a copy of the same letter that I used to use so that y'all can just edit that and go through that. And of course, hire a commercial real estate broker. You don't have to pay them. They get paid at closing with a commission agreement that they negotiate with the seller. They are incentivized to find a deal for you that works. They're doing all of these other things. So just set it on autopilot. Find a local commercial real estate broker, interview them. It's a big thing. Don't just pick the first one. Interview them, because not all commercial real estate brokers are created equally. This is a 2,200 square foot property that I bought back in 2020. Went under contract, before we went under contract, sent him a mailer. Guy was tired of dealing with his business partner. He was like, hey, I co-own the business in this building, but I own the building 100%. And the only way that I can think of getting out of business with this guy is by selling the building and telling him we have to shut down. I was like, perfect. How much do you want? He wanted $450. I wanted it for like $400. We settled at $435. So working with commercial real estate brokers and knowing the area really well, we signed a lease before I even closed on it. Appraised for $650,000 based on that lease. You can do what's called forced appreciation in commercial real estate, where the value of the property is actually based on the lease. Now, this is within reason, right? Like if market rates are $30 a square foot, you can't just go sign a lease with your own business for $1,000 a foot and sell your property for $20 million. But that's how we turned a $435,000 building into a $650,000 building without doing a damn thing other than signing a piece of paper. Pretty awesome. We then turned around, sold it, seller financed it, and now I'm going to make $150,000 more over the next 5 years off of one deal. That's like, what, $350,000? I basically made as much on the deal as what it cost me to buy. Pretty good deal, right? And that's all off of a letter. That's the letter. There will be a copy of that in the QR code that I gave you guys. But that's my letter. It's super easy. I mean, I came at it from the perspective of a broker. Y'all just come at it. You just edit it however you want. You'll realize once you open it, like, it's super easy. I've always found it's a lot easier to edit things than it is to just write something from scratch. So there you have it. Let's talk about CRS data. There will be a link through the QR code as well to this. Has anybody heard of CRS data? Man, like 4 people. CRS data is awesome. It connects into your tax records, and you can actually filter out, and you can tap into tax records anywhere in the country. There's a couple of spots in Texas that really frustrates me that they don't have those counties, but anyway. You can go to this thing called the advanced search. Right above that, you can see, like, you can actually type it in by counties. But once you log in to local look, you go to the advanced search, and then this is industrial properties in Nashville that haven't sold since 2015. Who thinks those are probably sellers, right? I mean, if you haven't sold since before 2015, I was actually looking at the individual records. Some of those guys have owned that since 86, 1970s. Talk about a step-up basis, man. It's a lot of value. Industrial in Nashville is just insane. 5,000 plus properties in Davidson County alone. At any given time, typically, this is what we track based on the brokerage, 5% of properties are willing to trade in any given year. So that's 250 opportunities, or more really, it's 5,000 plus. 250 potential industrial properties I could go buy in Nashville. Best part about it is you can export that list, and that's your mailer list right there, right? You just send it to whoever's gonna do your mailers. You're done. All right, let's talk about underwriting the opportunity. There's no 1% rule in commercial real estate. I guess there's not really a 1% rule in residential real estate anymore either, right? There's no like back of napkin number that's super easy to do these deals with because every deal is kind of different. But underwriting commercial real estate is very important. Aside from actually finding the deal, it is the second most important piece because you have to have full underwriting spreadsheets. Highly recommend having that to go through and run all of the numbers because you're not talking about like kind of like when you're buying a house, you look at it and you go, okay, well, year one, I can rent it for X, right? And most banks will say, cool, that year one projection of what you're gonna rent it for to the first tenant is fine. But if you're going to a commercial lender, they wanna see, what will the next 5 to 10 years look like on this property? And you need to be able to project all of those numbers, take into account all of your operating expenses, and show them all of that. One thing that's really annoying, even if you've got a single tenant property, they're gonna put on a vacancy rate on that asset. Even if it's full, like 100% occupied with a 10-year lease to a Walgreens, they're gonna say, yeah, we see a 7% market vacancy rate, so we're gonna discount the NOI by 7%. That's annoying, because it costs you on your debt. My back of napkin calculation is relatively easy. I like to look at things on a 10% cap rate basis. So if I'm buying a property for $800,000, and I've got to put $200,000 into it, it's $1 million. 10% of that is $100,000. That is my base rent. So what I'll do is I'll divide that out by the square footage of the building and then look at the comparable rents in the market. If I'm below what's available for lease today, we probably got a deal. If I'm above, probably not gonna work. Now, I get torn up all the time on Instagram for talking about underwriting my deals at a 10 to 12% cap rate. Because everybody's like, dude, everything's trading at like a 4, 5, 6% cap rate. You can't underwrite to that. That's unrealistic. Well, I'm also closing deals at that because I'm looking for them. They are out there. You just got to go and underwrite them. And typically what I'm doing too, to be fair, is I'm not buying stabilized assets. Right? I'm not going to go buy something at a 6% cap rate and then just pray that somehow the next year it goes up to 10. We're buying stuff that's typically vacant. We're doing some value add to it. Taking it from there. So you can really increase value. That's what an underwriting spreadsheet looks like. I don't know about you guys. I am not that organized to like keep track of that in my head. Not a chance. That's not even the full thing. Like I had to, that's like all I can fit in a screen grab. Okay, letters of intent. You've got one of these in the downloads as well. A letter of intent is basically the document that you're gonna go through before signing a purchase and sale agreement. So before you bring your attorney in and everybody starts spending money on legal fees, you're gonna do what's called a letter of intent. And basically that lays out the economic terms of the deal. That if you can't agree on those, there's no point in negotiating when you can and can't have access to the property while you're under contract, right? So we're talking, let's see, purchase price, earnest money deposit, due diligence period, closing costs, delivery conditions. There's all sorts of things that you kind of want to cover. Typically, these are 1 or 2 pages, relatively straightforward. I can send one of these in like 5 minutes. Just go in and quickly edit it. It's great. You can send out offers really fast. Commercial real estate's accustomed to operating like this. So I mean, honestly, if you wanted to include a letter of intent with a specific property that you're wanting to buy, you could. There's nothing stopping you from doing that. Mine says at the very end, this is a non-binding contract. It's not a contract. It's just a, hey, let's agree to these terms. All right? Give it to your attorney when you get to the purchase and sale agreement. I can't tell you how many deals I have done. I still give mine to my commercial real estate attorney. I'm like, Justine, please handle this. There are so many ways that I can get myself into trouble, and I promise you I am better at dealing with contracts than the average person, right? It's one thing that I've learned from some of the biggest, like I'm talking 9 and 10 figure net worth real estate guys that I've worked with in the past. They don't touch this stuff because they want to pass that on to the attorney and let them be liable for it. If something goes wrong, it's on them. They have to fix it. Plus, the thing that I've learned about contracts, especially like when you're moving from a standardized form to something like this where literally everything is negotiable, one word in one sentence, And one paragraph of one page completely changes the meaning of that contract. So don't mess with it. Give it to your attorney. Okay, we talked about due diligence earlier. You'll also get a due diligence checklist. Look, that's a lot of stuff when you're going through this. Not every single property is going to need that. You're gonna have some properties where it's like, yeah, okay, let's get a phase 1 environmental and a survey and we're pretty good to go, right? But if you're doing development, that's kind of, this includes investment and development. If you're doing development, you need every bit of that. You're gonna have to do geotechnical soil tests. You might have to do a phase 1 and a phase 2. You're gonna want all of that because the last thing you wanna do is buy a property that has oil drums under the ground that have been leaking into the water for 20 years. Because then it's on you to figure it out. We've got everything from easements to encumbrances, previous site plans, property surveys, zoning documents. I ask the seller for all of these documents because they might have them. That doesn't mean that I can use their survey for the bank. The bank's gonna want me to get an updated survey. Probably gonna have to do an ALTA survey, right? ALTA survey means that they're comparing what the surveyor is getting to what's actually recorded on the tax records, right? Because you'd be amazed at sometimes how property lines change, especially in this world. And then commercial loans are an entirely different beast as well. You typically can't just go to so-and-so mortgage broker. There's a lot of things that you've got to give to your lender when it comes to this. They're not just going to check your credit and check your bank statements and whatever. We typically prepare on the front end 3 years of tax returns, a personal financial statement, and then they'll probably run your credit. But I've got one right now that asked me for a W-2. I was like, I'm a professional commercial real estate investor. I don't have a W-2. It would be awesome though. It'd be great. They are diving into everything today. We can talk about that in Q&A if you want, if we have time. All right, operating the asset. Hiring a property manager is basically free. That's one of the coolest things about commercial real estate. I don't have to worry about paying a property manager 10% of my revenues, right? Which totally eats up profits. Because if the leases are structured properly, it's baked into the common area maintenance that the tenants pay, which means there's no reason for you to not have a property manager on the site. So if you're buying triple net investment retail, shopping centers, I'm actually starting to see the triple net lease go more into office space today, which is interesting. It's not historically how it's been done, but it's pretty cool to see. It just makes sense in my opinion. So get a property manager, learn how to manage them. It's a lot easier. The thing about commercial real estate, can you go do it on your own? Sure. You wanted to be dealing with the day-to-day, why are you going to take on the headache of getting into commercial? You could just stay in residential. We want to scale here, right? We want to get this big so that we can just collect passive income. And that's the beauty of commercial real estate. You want to understand the leasing process, I'm going to give you guys a copy of my book. I wrote it when I was 25 on how to lease commercial real estate, right? Very simple book. It's 150 pages. What I noticed when I was going through the process with all of these small business owners, people have no idea how the leasing process works in commercial real estate. Even businesses that have gone through it before, they have no idea. As a landlord, you really want to understand how that works. Because you could still get a bad attorney on accident or have a bad commercial real estate broker on accident that gets you into a lease that doesn't properly value the property or just puts you on the hook for expenses that you shouldn't be paying. I'll give an example, and I know this is on the tenant side. But this is how critical it is to have somebody review the leases for you. Reason I wrote the book. Back in, 2016, I was working with I got a call from a 22-year-old woman. She just graduated from Belmont University in Nashville, and she had opened up a boutique in Hillsborough Village. And she said, hey, I don't really know what I'm doing. I signed this lease, and the HVAC went out. And the landlord is telling me that even though the unit was 15 years old, since I signed the lease and accepted full responsibility for it, I've got to pay $12,000 to him for a new HVAC unit. She shut her business down the next week. She didn't have the money to pay for it. That can also happen to you as a landlord if these are not structured properly. So that is something that you want to keep an eye out for. Of course, cost segregation and depreciation. Who likes paying taxes? That's what I thought. I thought I was going to catch a couple of you. I bought an office building where my companies are currently located. $480,000, it's right next door to another project that we own. Very small building. And the first year, we got to write off 25% of the value of that property. So I saved $125,000 on taxes by buying an office building for myself. Not a bad deal, right? You can do that in residential real estate, but it's often not worth it as it is in commercial. Yona Weiss is a rock star. You guys have probably encountered him, just being in Brandon's sphere. But that's all he does is cost seg. And it's awesome. You can save a lot of money doing this. I've got clients, it's funny, a few years ago I was working with an investment firm out of New York, raising capital for one of our deals. And they sent me a term sheet that I couldn't really wrap my mind around. I was like, these guys don't want any of the cash flow? So I called them up. I was like, look, explain this to me because I've never seen anything like this. Most investors are investing because they want to get the cash flow as well as the appreciation, right? They're like, look, we represent high net worth individuals that are making 7 figures or more a year. They don't want the cash flow. They want 100% of the depreciation so that they can protect the cash that they've already got coming in. What an awesome problem to have, right? Like, I want that. That's a great problem. It's like, cool. I love cash flow. Good trade. Worked out. Newell Tower, that is a project that I found in Chattanooga, Tennessee, off of an Instagram post. I think I only had like 12,000 followers at the time. Posted on my Instagram that I was going to Chattanooga and that I wanted to see any off-market opportunities. One of my followers screenshotted that, sent it to somebody else who was in Chattanooga who wasn't even a commercial real estate broker. The dude just was really well connected. Toured me at 3 properties. We had this property under contract the next week, 41,000 square feet, 9 stories, off-market, for $1.8 million. Pretty sweet, right? It's like $41 a foot. You don't even have to be in commercial real estate to be like, hell yeah, that's a deal. You know what I mean? So our initial plan, it was in the opportunity zone, which is kind of crazy. We were just going to renovate it, open up 35 micro apartment units in there, and hold it for 10 years so we could take advantage of the tax situation with opportunity zones. Contractor gets in there, demos it out, and says, hey, will you sell this? I'm thinking to myself, like, hell no. I just got a really good deal on it. I want to hold it for a little bit. And so I told him no. And he said, no, come on, give me a price. I gave him a number that I was like, there's no way this idiot's going to say yes to this. I said $4.5 million, which was 2.5 times what we had just paid for it, not even 12 months before. He said, deal. And I said, damn it. I should have said 5. We ended up selling it within about 16 months and didn't have to do anything, which I actually appreciated because as the general partner in these deals, I'm the one taking on the debt. So I'm looking at this like, this is a pretty good deal for me. Pretty good deal for the investors. They made a lot of money, but I didn't have to take on any debt. Told you guys about this one a little bit earlier. That's my office building. Commercially zoned home right next door to the wash. Bought it for $480,000. Owner occupied. Anybody own a business in here? You guys looked into owner-occupied commercial real estate? Banks are falling over themselves to give you guys money right now. All you have to do, it's not all you have to do. You got to deal with the SBA, which is total pain. Not gonna lie about that. However, you get 25-year amortizations, which is typically 20-year in commercial. 25 is pretty good. And you only have to put 10% down. You got to owner-occupy 51% of the space or more. But dude, that's a 1,200 square foot office building. I'm going to be occupying 100% of that. So great deal. I think it was like, 48 grand down. My mortgage payment's $3,000 a month. It was less than I was paying myself in rent at another property that I own. So I will own that forever. Great little deal. This is another deal that we did. It's kind of residential, but also I think this is commercial, right? Like once you get to the big leagues here. 1.7 acres, zoned for 11 units, bought it, residential units. Bought it, rezoned it for 63 units. We bought it for $618,000. And we're under contract to sell it right now for $1,575,000. If you can entitle land, you don't even have to go through the risk of taking on construction and development loans. You can just buy raw land, go through the process of getting it fully entitled, and flip it. We've got $200,000 into this deal. We're going to walk away with 1.1. Can't really do that with houses. Can you all tell I don't really like residential real estate? I'm always the guy in the room that has the most controversial opinion on residential. I think it's great. Like you got to start somewhere, right? But I want you all to see the light. Commercial's way better. It's really not that hard. It's really actually a lot easier than most people think. It's just, again, it's like there's not that much educational materials out there. So people just don't know where to start. All right, we've got 7 minutes left. That's the QR code if you want to get those downloads. There's a link to CRS data on there. My Instagram is up there if you want to DM me and ask me a question instead of grab me after in person. Maybe you're shy. I don't know. And then, of course, my YouTube. But let's go ahead and open it up. For Q&A, we got a mic runner. What controversial thing did I say that you want to ask me about?
I was curious about the owner-occupied loans.
Yeah.
Is it possible to, similar to house hacking, to do that where you buy a commercial property that's got 4 office fronts and you do 10% down if you occupy one of those fronts?
Absolutely. So you got to occupy 51% of the square footage, right? So that's the big thing. Some banks, I've only found one bank that'll do this, but I'm sure they're not the only one. Some banks will do 25%. So you only have to occupy a quarter of the real estate. And then I think you only have to do that for 3 years. So you could house hack commercial real estate, right? And every 3 years, once your prepayment penalties roll off on the SBA loan, refinance it with a local lender, and then open up your balance sheet for another SBA loan from there. I love it. I have a very different opinion on the commercial real estate market because I'm on the brokerage front too, right? I think that's a big thing to note. A lot of people that are saying commercial real estate's in trouble are not in the brokerage world. So I'll caveat that with brokers are the eternal optimists. We want the market to always be great because we want you to buy. I actually think today's a great time to buy. It is a better time to buy than we've had in the last 10 years because everything is on sale right now. Here's the thing, you can refi a bad interest rate, you can't refi a bad purchase price. And if you can get a property today on discount from what it was in 2022 or 21, even better, you can just refinance out of that loan here in a couple of years. We're seeing on the leasing front, businesses are still signing leases. Now, this may be Nashville specific, right? We don't handle leasing outside of Tennessee. So I also have to, understand that I'm in a very special market. But if you're in the Sun Belt and leasing activity is strong, then I don't think you have anything to worry about. I think make sure that you're buying it at a good price, make sure that you've got really good tenants, and make sure you're just doing your due diligence. But I think the market's fine. Does it suck that interest rates are as high as they are? Sure, they were also the lowest we've ever seen, to be fair. We got a little spoiled for a little bit. Everybody has this 12-month look back when things are amazing. And then for whatever reason, when interest rates go bad, we're like, oh man, market's just never gonna recover. But I think if you can buy today and negotiate a really good price, it'll be good. I wish I had more time to dive into that because I've got a lot more to talk about, but grab me afterwards.
I just wanted to find out about the entitled land. Where do you get the information?
Land entitlement? What is land entitlement?
Yeah, entitled land.
Cool. Yeah, so land entitlement is basically where you're figuring out the highest and best use for a piece of property that it doesn't have today, right? You're going through and getting it rezoned. I could go buy an office building, get it rezoned for 250 apartment units and flip it to a multifamily developer for $30,000 a pad. So there's so many different ways to do it. Easiest, of course, is with raw land, price-wise. Not necessarily rezoning-wise, because typically raw land is next to more raw land, and people that own raw land don't want anything being built next to them. So there's kind of a give and take with land entitlement. But take Nashville, for example. You cannot build enough houses down the I-65 corridor. Seems like everything that gets built is gone. Well, there's also a lot of farmland further down I-65. So if you were going to go down there and look at the path of development and see where all the houses are being built and buy some land right down the road that's pretty cheap, chances are pretty good you could argue, well, everything in the area is going to 5-acre lots. I should be able to turn this 100 acres into 20 units. You'll probably get it. Now you can sell it, instead of a price per acre, a price per pad to a builder or a developer, right? So it's a lot of fun.
A quick question, from an acquisition perspective, what would you be bullish on in the next 1 to 2 years?
I am not bullish on self-storage because unless you're building it or unless you're getting it at a really good price. There's been, and it depends on the market too, right? I'm about to build self-storage, so I know I'm saying I'm not bullish on it, but I'm about to build some. You have to really, dude, follow AJ. He talks all about this. He's awesome, right? So he'll make sure that you're protected. There's a lot of people I've seen getting into that market here recently that have no idea what they're doing, and it's too late if you don't know what you're doing. Office, 1 and 2 stories. I love 1 and 2 story office because it can be converted into something even better, flex space. You can get it very cheap. I've got a buddy doing this in Atlanta. They're buying 1 and 2 story office space, like 80s vintage, for $60, $70 a foot because nobody wants office space today. Going in, they're spending about $15 to $20 a foot to tear the ceilings out, tear the walls out, put some roll-up doors in, and now you've got industrial flex at well below replacement cost. Like it costs $100 to $120 a foot to build industrial flex. So if you do this, you're actually probably going to be in a pretty well-located area. You have more parking than you really need, which is pretty great. Let's see, what else? I love hospitality in the Sun Belt, Nashville, Austin, Charlotte, Denver, and retail. Retail is just great. Neighborhood retail specifically, I wouldn't necessarily be buying like a power center today that's like anchored by Target, unless it was anchored by a grocery shopping center. That is all we've got time for. I hope you all enjoyed that masterclass on how to get started in commercial real estate. These are principles that I dive even further into with my program, the CRE Accelerator. You can learn more about that in the links below. And if you'd like to get all of those free downloads that I talked about throughout the talk, scan this QR code here.